Hi, I'm Steve Spencer. I partner at SMB Capital, a proprietary trading firm in New York City where we trade stocks, futures, and options. In today's video, I'm going to answer one of our students' questions about fading stocks on lower time frames. So let's read Joe's question. When it comes to fading a stock using smaller time frames, I need help. Your mentoring session in Module 7 discussed using smaller time frames to fade a stock. While it makes sense to do so, I am slowly bleeding my account by trying to fade stocks on the smaller time frame. That's not good. We don't want that. That clearly have the momentum on the higher time frame. What is the rule for, quote, fading on lower time frame? If you're interested in finding out how to fade stocks on the lower time frame, stick around. Welcome back. Before we answer Joe's question, I wanted to remind you we are running the 2-hour free workshop. If you click on the link above, where I spend 30 minutes teaching our proprietary stock selection process, where you learn about the lowest risk, highest reward setups each trading day, as well as 3 low risk, high reward trading setups we use on our desk in New York City. Okay, so back to Joe's question. So Joe is struggling using a technique that we teach in our DNA training program. And I just want to clarify what we mean by fading stocks on the lower time frame, which is a topic which I teach for price action trading. So what we want to do is look at the higher time frame from whatever time frame we're trading, look at that trend, and then use the lower time frame to actually fade in the opposite direction of that trend to give us a good entry price. So for example, in day trading, people are trading minute to minute. Sometimes they're using the 5-minute chart. What we do is we go up to the 30-minute chart to look at what the trend is for the day. And for example, if in this case, Joe was trading ROKU, and we'll look at the chart that he marked up for us in a moment. And ROKU on the 30-minute was trending higher. So what we would do in that case is use the 5-minute to look for pullbacks for spots to get long to take advantage of the higher time frame trend, and vice versa. If a stock was trading lower intraday on the 30-minute trend, we would look on the 5-minute to fade into movements higher to establish short position. The places that we're most likely to use as levels to fade into are prior support or resistance levels, where a stock is likely to meet supply or demand. VWAP, if a stock is trending lower and then it has a bounce and is coming back into VWAP, we'll be using that lower time frame to fade into VWAP area. And we're using the lower time frame to identify, is the stock starting to kind of stall out to give us an entry, even though we're going against the trend of the moment, giving us a spot to enter. So let's take a look at the chart that Joe shared with us. And this is ROKU from the other day. And he shows us actually where he got short. And so you can kind of see on the left side of the chart, it's moving higher. It pulls back a little bit, and then as it starts to move up again, he gets short. So I want to show you what the 30-minute chart looked like that day, so we can kind of see what the stock was doing. So the next chart is the ROKU from the same day, and what you can see on the first 4 bars is it's in a very strong uptrend. Now it starts to move sideways when he gets involved attempting to short it, but it's clearly not trending lower. It was trending up, and now it's trending sideways. And whenever we have a trend on the higher time frame and then you have sideways action, the burden is on the traders or the people taking positions on the opposite side of that primary trend. So if in this case it actually had broken lower on the 30-minute and started a new trend, then perhaps it would have made sense to short a pop on the 5-minute. But in this case, it really is just moving sideways. The trend resumes in the afternoon, and you can see it goes a few dollars higher. So here is a zoomed in 5-minute chart that I marked up for you on the same day that Joe was asking about. And you can see on the 5-minute, what I would be doing is looking for spots as it pulls back into the uptrend from the morning to get long. So on the open, you can see it moves higher a couple of dollars. It starts to move sideways and then breaks to the upside. I circled a red bar there on the 5-minute when it pulls back down to the breakout area. Now, it didn't quite come in deep enough to potentially get long there, but that's the basic idea. It broke out after that consolidation, moved higher on that first pullback, buy into the breakout area. And if it actually drops that consolidation area, then you know you're wrong. But in this case, on that pullback, you're still going with the direction of the trend from the open, which was higher. So great example there. Let's look at an example on the short side. So we know that the market has been trending lower for the past 2 weeks since we failed at SPY 289. I've been fading each up move as we've been trending lower. And I'll show you today's example of how we did that. So first of all, here's the 2-week chart showing where we failed last week, and then we started to move lower. At the beginning of the week, we were fading into 284. It failed there 2 days in a row before the hard down move we saw yesterday. So this morning we came in. We were still below 280, which we know in the 280 to 281 area psychological level. As long as we're below that and we're still trending lower, I'm going to short the pops. And we know it psychologically can be difficult on the lower time frame when you're trading intraday and you see this downtrend, but intraday, right on the open, the market is moving against you. It is a little bit difficult to stick with that trend. And so one of the things that I do is I have 3 time frames. I have the daily time frame, the 30-minute time frame, and then the intraday time frame. And so this morning when it was gapping up to 279 and then working its way into 280 and I was shorting, I could very clearly still see the 30-minute chart and the daily chart. We're still trending lower. I understand on the 5-minute, it looks really strong right now. So this morning the SPY was gapping to around 279 and my plan was to short on a pop into the 280 area. Now, I knew that my mind would likely be saying to me, if we gap to 279 and we're moving up to 280, that the market's strong today. Look at, bids are holding higher, but at the same time, on the higher time frame, on the hourly time frame, on even the 4-hour time frame, we are trending lower, and that's the trade that I'm making. I'm looking to trade that up even a higher time frame than the 30-minute, understanding that we could roll over, perhaps fill the gap from today, maybe even test yesterday's low. So I'm mentally prepared for that uncomfortableness. And that's half of the battle, understanding that when you're fading on the lower time frame, at the moment, your mind may be giving you a signal, this is wrong, this is wrong. Step back, look at the higher time frame chart. Is the thesis still intact? And then also have a detailed trading plan. When I'm shorting into 280, where's my stop? Above 280.30, I got to cover some. Above 280.50, I got to get flat and start over. But doing that preparation, having the detailed trading plan before, having the mental image of what the higher time frame looks like, as well as the charts handy there, that's going to help me when I'm fading the market as it looks really strong for the first 15, 20 minutes or so as it's working its way into a likely failure area. And so you can see on the 5-minute chart here, it worked on the open, it's at 79, it moves up to 279.80, it looks quite strong, but I start shorting it because it starts moving sideways, about 20 cents below the 280 level, and I short it, it comes in a little bit, but then it makes a new high. And of course, my body's saying, intraday new high, this isn't good, but what you can see is it gets above 280 for a moment, and then the next bar is a hard red bar, and then it takes out the morning low, it breaks the intraday uptrend, and the higher time frame trend resumes, and then at that point I can look to potentially find spots to add to my position into the intraday weakness. And so today's video is about using the lower time frame to fade into a position of the primary trend. What is the higher time frame? We call that the primary trend. And at the same time, understanding when a trade is working for you after you've faded in the lower time frame, when the lower time frame starts to move in the direction of the higher time frame, and that's what we know called trend alignment, you can press a position that way as well.